Hi everyone, let's go over my bullish and bearish medium time frame, low time frame and micro Elliott Wave scenarios on Bitcoin, starting with two unlikely medium time frame scenarios, where the first one is a 1-2-1-2 for then a bigger 3 to the downside, where you really want to see volume pick up while price is moving in this wave 3. Couple of reasons this is unlikely to me. The first one, the shape of the trend line. So if this is a 1-2-1-2, then you want to see the trend lines converging to one another. But as you can see, it looks more like a channel, or you could also say that if I connect this lower trend line to the wick at the bottom over here, that they are diverging instead of converging. That's not what you want to see. Secondly, this wave 2 over here is of a lower degree and more commonly is therefore shorter in time than the higher degree wave 2, because this is a 1-2 in blue and then the white count is part of the bigger wave 3. So usually this wave 2 should then be shorter in time compared to this wave 2. However, this wave 2 over here is longer in time compared to the first wave 2, which is not what you want to see. If we then look at the corrective structures of these wave 2s, usually in a very impulsive 1-2-1-2 scenario for then a bigger 3 to the downside, you would be looking for at least seeing one zigzag or two zigzags, which are short 5-3-5 zigzag structures. And those corrections are relatively short so that the continuation to the downside happens very quickly. But as you can see, so far these corrections have been very sideways and taking a lot of time, which again is not really something you want to see in a 1-2-1-2 scenario, because a 1-2-1-2 should be very, very bearish. So it should be a quick impulse, relatively short corrective structure, and then a quick impulse. That is what you see most commonly in a 1-2-1-2 scenario. If we then go to the second structure, I've seen some diagonals here and there, which then means this is a wave 1, 2, then a 3, 4, and then looking for a wave 5 to the downside for then continuation to the upside. Now, of course, the result of this potential diagonal with price moving to the downside can be correct, after which you can have then a move towards the upside, but I would count this differently and put this structure at the moment as unlikely as well. Again, one of the reasons is looking at the trend lines. Do we actually see a diagonal or do we see a channel when you look at the chart like this? Well, for me, it's very difficult to look at this as a diagonal. It looks more like a channel over here. The trend lines are not really converging like you like to see, a clear converging trend line structure. And you could again argue that the trend lines are even diverging if I connect it to the wick. So that's not really something you like to see. Then each wave has to be shorter than the previous wave, talking about the impulses. So if this is a 5, then you have a wave 2, and then you have the second 5 wave move to the downside, and then a 1, 2, 3. This wave 3 should be shorter than this wave 1 in length. Now we do have a wick over here, and the wick touched the 1-to-1 and even went below the 1-to-1. Now if this is then arguably the low of a potential wave 3, it invalidates a diagonal scenario. Some people may think, okay, then wave 3 is the red candle. Okay, wave 3 is then the red candle, and then this is correct, as then this red candle over here did not touch the 1-to-1. But of course, where does it then leave this wick to the downside? Then when we're looking at a diagonal, you want to see wave 2 and wave 4 as zigzags, especially in a leading diagonal, which this then is. So in a leading diagonal, the wave 1, 3, and 5 can be zigzags or impulsive structures, in this case impulsive structures, but wave 2 and 4 have to be zigzags, which means it's a 5-3-5 wave structure, which is already invalidated in a wave 2. And then again, you want to see a 5-3-5 wave structure in then a wave 4. Now, arguably, you could think of a 5-3-5 over here, where this then somehow still is a 5 wave count, and as mentioned, this move over here in previous videos is very difficult to count in a nice and clean 5 wave structure. So yeah, arguably wave 4 could be a zigzag, but of course again it's not preferred because of this first wave over here. And wave 2 doesn't look like a zigzag at all, because if this is a wave A, then you have a wave B, then you're looking for that wave C in a zigzag to end above wave A. However, we never took this high. If you then look at this wave 4 hit the golden pocket, taken from the low to the high of 2 to the low of 3 over here, and the golden pocket is a rare target for a wave 4 in a diagonal. And lastly, if this is a diagonal, you want to see volume going down while the pattern is evolving. But as you can see, the volume has been pretty stable, I would say, already from the beginning. It's not like a clear trend to the downside. Instead, it looks pretty stable to me. So volume is not really on the side of a diagonal as well. And that's the reason why I've mainly been looking at a corrective structure like this, which is then an ABC corrective structure in a W, followed by an X. And now we're looking for eventually a wave Y for more downside. A wave Y can have many different corrective patterns, which I'll show you in a second. But in this scenario, wave X finished over here after taking the liquidity of these highs, hitting the 0.5 Fibonacci, which is nice as well as a target for X. And now we're looking then for a downside move where we also have a double bottom at 25.8k, which always attracts price. The 0.618 is a target for a wave Y sitting at 25.4k, and also the 1 and the 1.236 between 23.7k and 22.6k is a target for a wave Y, with the 1.618 being a rare target. If we then look at potential scenarios for this wave Y, there's 3 that are allowed. So first of all, we could have a double zigzag, which is then a zigzag in a W, 535, followed by any corrective structure in an X, and then another 535 move, and then eventually a wave Y, where usually wave Y will then end at least around or past the 0.618 fib time of this wave W. So the fib times that you see on the chart taken from the high to the low of W to then the high of X, to compare the time it took to develop wave W with the time it takes to build and work on wave Y basically. And what you see over here is a bars pattern, literally a copy of the chart of wave W. Of course, a wave Y zigzag, 535 and then an A, then we have eventually a corrective structure, and then again a 535 can have a completely different form, but it's just to show you a little bit what it might look like, right? Then we have a potential flat scenario, which I think is very attractive indeed, because I think it will mess with a lot of people, where you then have a flat scenario in a wave Y, where eventually you have a move to the downside in a wave A, which can be any corrective pattern, but not a triangle. So this can be a flat in a wave A, it can be a zigzag in a wave A, all good. Potentially taking the lows over here, the double bottom, maybe, maybe not, we don't know yet, as price is just like in the middle of this range really. For then eventually a move to the upside in a wave B, which can also be any corrective pattern, but not a triangle. So wave B then above the origin of wave A. And I can already see people thinking, oh, this is very bullish, right? Continuing to the upside, because now we broke out of this range. But then interestingly, price then moves to the downside in an impulsive structure, which is then a 1, 2, 3, 4, 5 in a wave C and wave Y, taking the liquidity again below these lows, also potentially hitting some support areas that we have over here as well, some target boxes, for then a move towards the upside. And the reason I think this might be difficult for many people, especially of course beginner traders, is that over here people might be longing as we then get out of this range over here, especially maybe after taking liquidity below these lows. People think, hey, move to the upside. But if this is a 3-wave structure, please pay attention to the potential of a wave B expanding flat if this scenario comes to fruition, and you have the possibility to move down, where then I can already see people being like bearish over here, but then instead price moves to the upside. And then finally a potential triangle, where a couple of rules that are important is 4 out of the 5 waves have to be zigzags. Then if one of them is not a zigzag, so a zigzag 535 move, that is, if one of them is not a zigzag, it's usually wave C or wave D that is more complex, and you want to see the volume throughout this triangle reducing as well. So that's something to keep in mind. If we then go to the low time frame scenario, then we have the first like bullish scenario over here, which starts to become less likely the more price over here is actually going to the downside at the moment. So in this scenario, we're then looking at a wave 1, 2, and now we're looking for a bigger 3 towards the upside for much higher prices, where 31k is a minimum target. This wave 1 over here is difficult to count as a like 5-wave structure, as mentioned before, so that's not really nice. It looks better as a 3-wave structure than a 5-wave structure. Wave 2 bouncing on the 886 is a rare target for a wave 2 and more commonly for a B or X. If this is part of a wave 3 to the upside, you want to see volume increasing as well, because wave 3 should be the biggest, longest and strongest wave. However, as you can see, volume down here pretty disappointing during this move towards the upside, which was also one of the reasons, by the way, that the low time frame bearish scenario was more likely. And then we have this being a wave 2, and you really want to see price moving to the upside eventually, right? If we then also look at the fib time, as you can see over here, then this wave 2 is incredibly long actually, again, for a 1-2 scenario, where this wave 2 is, let me remove the volume, is 3 times longer than the potential wave 1, which is incredibly long. Now, of course, this is a more like sideways wave 2 over here. One can argue like 5-3-5 wave move, but not like, for me, this was a complex structure in a WXY, which again is a little bit less common in a wave 2, and in a 1-2-1-2 scenario you prefer to see shorter zigzag moves because of the impulsivity of a bigger 3 towards the upside, right? So less likely to me. If we then look at the bearish scenario, we have a finished structure and then a ABC or a WXY, where the 886 is a common target for X or B. Very nice. We identified this area for a potential short over here. Very nice indeed. Wicking above, taking the liquidity, which was one of the targets for then a move towards the downside. And what I like is that this wave C and Y is between the 1 and the 1.618 fib time, taken from the low to the high of A or W to then the low of X or B, to compare this move to the upside in time to this move to the upside in time as well. So that's very nice. Looks to me then very nicely as a finished structure, where this is the beginning of something new. And if we then go to the micro scenario, then what is happening on the lower time frames? Let's put on the target boxes as well, because at the moment we are still at support, where we have this support box between 26.9k and 26.6k. Overnight, for me at least, price continued moving to the downside over here, grabbing all of the support that was available inside this target box, and now we have to wait and see. So there's 2 scenarios that I have still. The first one is that this is a 3-wave structure. And this then is a 3-wave structure in very likely an A, B, and then a wave C, because of the impulsive look of this move over here. It's actually quite difficult to count a micro at the moment, because this looks very 3-wavy, right? And if you're looking at an A, B, C, or a 1, 2, 3, you're looking at a 5-wave structure, then somehow this over here has to be a 5-wave move, or maybe this is the first 5-wave move, and this is already it's a mess. Like this first wave over here is very, very difficult on the very lower time frames. But at least looking then in an ABC for a potential A, right? You see the blue A over here. Then we're looking for a 3-wave structure, where this is very important support, this target box. So preferably, I don't want to see these lows taken in this scenario then, where this is then the low for potential wave A. And if this is a 3-wave structure, what can be interesting is a potential expanding flat. I love expanding flat. So then you have a 3-wave over here, followed by a 3-wave to the upside, where people might be like, yo, we're breaking out, you know, this is a potential wave 1, 2, and then a bigger 3 to the upside. But then the problem is that if we move up in a 3-wave structure, another 5-wave continuous move, then you have to be wary of a potential wave B, where the most common target for B is then between the 1.236 and the 1.38. And let me actually adjust this a little bit to the new low that we made. There we go. Where then the 1.236 and 1.38 is exactly inside this target box. It's beautiful. 28.9k to 29.2k. So be wary that if price from here is starting to trickle and move towards the upside in a 3-wave structure, this is going to be very, very, very important resistance. And for a wave B, if we find resistance over here, move to the downside, then in a wave C, you want to see an impulsive move to the downside. So a quick move to the downside, where eventually, very likely, these lows over here are then going to be taken. Another scenario is that this is part of an impulsive move to the downside. So let me open the volume, where this is then either like a 1-2 over here, 1-2-1-2 scenario, or a 1-2 and then eventually a 3. It's again, this beginning over here is not clear at all. So I'm like mainly looking at this structure, and based on this trying to look for like the total picture basically, right? Because you can count like a 5-wave move over here. That makes it a bit easier than this structure. But then you have a impulsive structure. So 1, 2, 3, 4, 5. And for a wave 3, you want to see the 1.618 hit, which is actually below price at the moment. It's around here, just above this blue target box that is below price, between 26.2k and 26.350. So if price would move to the downside, then it becomes for me more likely this is an impulsive structure with the wave 3 target, minimum target usually for a wave 3 being the 1.618, sitting around here. But as it stands now, we are still bouncing in a wave A target area, and this being then a 3-wave structure. So for this being a 3-wave A, it's important that we are gonna find more upside. And if we then quickly look at the CVD, we do do have bullish CVDs between the higher lows over here, higher low on price, lower low on the CVD, but I would like to see local CVDs building as well, because for me those have priority. So if we then look at the 1 hour first, then you can see on the yellow line, as well as actually the blue line, higher low on price, but on the yellow and the blue line, lower lows on the CVD. Bullish divergences, where the target for these divergences are taking the highs over here, which would work very nicely with the expanding flat idea of this being an A, 3 wave in a B, and then a wave C towards the downside, where then we also hit that target for the bullish divergences. And preferably, again, you want to see proof of support locally, that if you are looking for a potential long trade in this area, that you know what you're looking for. What are your entry requirements? Tick all the boxes of your entry requirements. Maybe it's a market structure change, maybe some bullish divergences locally, maybe volume related like stuff, whatever it is that fits your plan and your strategy for then a potential trade. I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator that you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.